falling rates for sure are starting to unlock deal flow. What we're starting to see is a lot more acquisition financing, so buyers and sellers. What's interesting though is over the last couple of years, we've seen reasonably flat gross deal flow. So we've seen a lot more in refinancings, we've seen development financings, although development starts have started to slow, and as pricing has started to become a little bit more acceptable for both buyers and sellers, we are starting to see affordability of debt as well as a little bit of tightening of yields to support additional deal flow. So in terms of markets and subsectors that we look at, we're reasonably agnostic. We're very much focused on underlying story, business plan, sponsor, et cetera. So from a debt perspective, it's a little bit easier for us to kind of spread throughout. I would say we're very active and we follow our borrowers, through anything from residential, logistics, et cetera. But at the same time, we do look at a lot of other asset classes. We've looked at greenhouses, we've looked at schools. So all of that comes down to what are all the components of the deal, the borrower, the business plan, and what is our basis, and what can we achieve in terms of structure. So it's a really unique environment in terms of where lenders are active today. There's a lot of different types of lenders. I think those who have larger platforms, ability to support, complex business plans, not just originate a deal, but live with that deal through the lifespan of that deal, super important. So lenders who are established, lenders who are well capitalized, lenders who have good relationships with backed banks if you're looking at back financing, and really platforms to help support your borrowers throughout the longevity of a deal, I think is really important. I think that sustainability is a key part of what we do. Our platform has a dedicated team that helps us understand sustainability. The factor that really matters though is what do our investors need and what do our borrowers need? So our ability to close that gap and provide solutions that work for both investors and borrowers is absolutely critical. Sustainability is a key part of that. And sustainability is what helps drive asset values in today's environment. So understanding how to quantify that and work within that environment is absolutely critical, more so than it ever has been. So in terms of approaching credit selection, it's a very dynamic conversation. A lot of what we do is step back and think about, what does the underlying asset look like? Who is our borrower? What is their business plan? And then more importantly, almost, what does the capital structure look like? So who's in the capital structure? What are the controls and negative controls that we might have within that structure? And how are we executing around that? Offering a holistic solution to our borrower, flexibility, speed of execution, et cetera, but really also making sure that we're thinking about all angles.